Hi, I'm Victor. In this video, I'm going to cover Uber, the big ride-sharing app that also delivers food, groceries, and is now in the freight business. They had their earnings released today. They had a very positive earnings release, and I wanted to update my analysis on Uber and share that with you. I like to scorecard my investments. It involves 4 questions followed by an action item. First, do I want to be a part of the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. That leads me to the decision to buy more shares, sell, or hold. One of the great things about Uber is they've built their scale over the last 10 years. They have nearly 23 million trips a day on Uber, 131 million platform subscribers. So with that type of scale, profits and free cash flows are going to come in the years ahead. Taking a look at their revenue and a couple other metrics, their revenue increased by 90% year over year. Just phenomenal. Their free cash flow, they went from negative free cash flow to positive free cash flow. And if you exclude a settlement they had, which is not an operating item, they were at 1.1 billion, which is a great turn for a company. Again, I talked about their scale. If their scale can really become more profitable and generate more free cash, this is a great company to own. Last thing is they provided guidance. They're going to continue to grow in Q1. So they're going to have a nice growth rate of 20 to 24%. Uber's international diversification is excellent. They're obviously really popular here in the United States. They had great growth, 38%, but in Latin America, they're growing at 31%. In Europe, Middle East, and Africa, 110%. And then in Asia, they're growing at 32%. So they have a global business that's booming. Their balance sheet's in really good condition. They have a very high cash amount on hand. They also have really good investments that they carry on their balance sheet. And their debt hasn't grown. It actually went down $10 million if you compare last year to this year. So looking at their income statement, the revenue line is excellent, great growth, but their expenses are growing as well. This line here is the most dramatic line. It doubled, more than doubled, and it's the biggest expense line of their P&L. I believe this is the line where they're paying drivers and all the expenses that go into providing rides and then delivering food. So it'd be good for them to get more efficient and become more profitable. I think it's going to be key for them to really control that expense line. Looking at the statement of cash flows, again, they made a turn to positive cash flows in 2022, which became a really important item for me as a value investor. I want to see positive cash flows because I discount cash flows to gain an evaluation. Overall, that was a big positive for Uber. Their operating free cash flows from operations was 642 million. And then their investments in property and equipment were 252, netting them a $390 million free cash flow rate for 2022. Their stock price over the last 5 years hasn't done great. They're down 13.66%, but a lot of stocks were down in 2022. If you look at the last 12 months, the stock's down 6.78%. Again, 2022 is really hard on growth stocks and technology stocks. But if you look at the year to date, holy smokes, they're up 40.77% year to date, which is a great return the first 5-6 weeks of 2023. So things are really looking up for Uber. I value companies based on the free cash flows I expect the company is going to produce in the future, and I discount those free cash flows to today's dollars. Uber provided their free cash flows, and I excluded a settlement they had because that's not an operating item. I'm not expecting them to be settling with governments each year. So my starting point is $1.1 billion, and that's in their financials that they provided. That number, I'm going to grow at 25% each year for years 2, 3, 4. I think their scale, their established company, they're going to really start growing cash flows. And the first 4 years will have that growth rate, and then long-term growth will be 6%. Based on that, I'm going to use a weighted average cost of capital of 8%. Great balance sheet. They got plenty of cash on hand. And I get a valuation, an intrinsic value of the company of $84.3 billion. Their market cap is 73.5 billion. So it leaves some room, a discount of 17% on Uber. Their balance sheet is in great health. If you look at their net debt to EBITDA, it's 1.8, which is a very good sign. Quick summary on Uber. The performance, excellent. High growth company. They've made the turn to free cash flow and they have proven scale. So I'm very happy with their performance. For 2023, I expect high growth to continue. They guided the first quarter of 2023 to grow 20 to 24%. They're going to expand free cash flows, and I expect this stock's going to climb in 2023. My outlook, long term is Uber is the leader in rideshare and delivery. The brand is recognized globally. So that's going to be a big tailwind for the company. Higher growth, better profit, better cash flows, and there is high upside for this stock. So let's scorecard Uber. Is it an industry I want to be a part of? Absolutely. This is a new industry in our economy. It's about 10 years old, I'm going to guesstimate, but it really is going to continue to grow, and the use cases for Uber will continue to expand. The company, exceptionally operated. Debt is less than 3 times EBITDA, and you get a small discount on the stock. So I am a buyer of Uber. Thank you for watching the video. I hope you found it interesting and discovered something new about Uber. Keep in mind, I'm not recommending you buy Uber. I'm just sharing my experience as an individual investor in the company. Good luck investing in 2023.